Hello. Mm. Can you hear me? Hello. It's working. Can you confirm, Calito? Okay, perfect. Well, welcome back to a new session of how to how to do things with Hummingbot. Today, we're going to learn how to customize a pure market making strategy. So it will be for me, it's a very good example, this one, since the the objective of today is to see exactly how you can use Hummingbot to create your custom pure market making strategies. For this also, we are going to use as an example a market of the miner that is used in the miner. So I think that will be interesting too for the ones that are trading on the miner platform. And also, we are going to customize the example by using technical indicators. So probably, as I know, a lot of you are using technical indicators to see where the trend of the market is going, to see if the volatility is high or not. So in this example that we are going to use to see today, we are going to learn how we can use the new candles component to code to include indicators in our strategy. And with those indicators, we are going to adjust the spreads, and also we are going to shift the mid price. So, well, let's stop talking and start reviewing the presentation that I prepared for you. So, is this one? Okay. Well, let's start first with this presentation. I don't know if I present here. Are you seeing can you confirm, Carlito, that you are seeing the presentation and it's working properly? Because I don't know if the full screen makes some changes or not. But if you can confirm that you are seeing this properly, I will continue. If you can't see, I will minimize the window. Okay, it's blurred. Perfect. Now it's working. Should be working now. Okay, let's review it in this size. Okay, well, today we're going to see how we can customize the PMM with indicators. So, first of all, we are going to have an introduction. Then we're going to review the design of the strategy, and then lastly, how to implement that with scripts. So, introduction. Simple pure market making strategy. You have to place two orders around the mid price, and you will try to capture the volatility. What is using a pair of orders. So you're going to place a buy order and a sell order, and those orders will be like paired. So as you can see here, we are going to place one buy order here and one sell order here, but well, the normal strategy is using the mid price, that the mid price is the average between the best bid and the best ask, and then based on that mid price is going to apply an ask spread and a bid spread, right? Risk of this strategy is one, the risk of holding the asset, because you are going to have the base asset in your inventory, so you are subject to the movement of the price. If the price goes up, you win money. If the price goes down, you lose money. And the other issue that you have is inventory risk. Why? Because if you have two orders and in an uptrend, always your sell order gets executed, you will have all the quote, your inventory will be much more shifted to base asset. So you're going to sell the asset when the price goes up and then buy the asset when the price goes down. That means that you're going to sell low and then buy high. That's one of the problems that you can have as a market maker. So probably if you detect that you are in an uptrend, you would like to place the sell order higher and the buy order higher too. So the execution will be like moving towards the trend, right? Well, that's like the intro of the pure market making and the risks that you have here. And well, now we are going to see what we are trying to do. This is obviously it's not a financial advice. I'm not telling you use this strategy. In this case, we're using just two indicators to demonstrate how it works. But then it's up to you to do some research and see which is the indicator that fits to your strategy and the management of your risk. So this is what we are going to do. We're going to use the trading pair RLC based on the miner platform. Here we can find that there are a lot of trading of campaigns that we can provide liquidity. I found this one that is RLC USDT. Probably this is also not a financial advice, but can be interesting to do some cross-exchange market making between RLC ETH and RLC BTC and RLC USDT. So probably I would recommend you to review if there is any opportunity between these pairs. But in this tutorial, just we are going to focus only in this one that is RLC USDT. So I have it here in favorites. This is a trading pair. Here we can see the bid, the ask. Well, now let's review what is the indicator that I am going to use, right? So, well, first, let's review here, and then we are going to see a graph. We're going to use 3-minute candles to compute the indicators. The indicator that we are going to use to shift the mean is going to be the RSI. The RSI will tell us if the asset is like oversold or overbought. So if the RSI is high, means that the asset is like oversold, and probably the price is going to go down. So what we want to do, if we detect that the asset is oversold and the price is going down, we want to shift the mean shift down the mean. So we are going to subtract like a value. So let me connect. Well, yeah, we can see it here, but if the RSI is high, then the new shifted mean will be lower than the current mean. We're going to shift the mean down, and the sell will be much more closer to the mid price. So we are going to move the price. I don't know if I have here to annotate. Let me try to do some annotations. How can I do this? Because I don't have. Well, I can. We can review it here. So suppose that the RSI is high, so it will be like oversold. The new price, the trend says that the new price is going down. So we are going to have here a new. This would be the new mid price. Will be something like this. So instead of using the mid price as the average of the reference price as the average of the best ask and the best bid, we're going to shift this price in this direction if the RSI is high. That means that it's oversold. So if this is the new mid price, this buy order will be now here, for example, and this sell order will be here. So the probability of execution of the sell order is higher than the buy order because the RSI is saying that the price is going down. If the RSI says that the price is going up, now the probability of execution of, suppose that is this case, right? The probability of execution of the buy order is much more higher than the one from the sell order. We have to move this to because they have to be at the same distance of the mid price, of the reference price. So the probability of execution will be much more higher for the buy order than the sell order. That's what we are going to do by shifting the mean, what we are expecting to have. Let me move this properly here and this here. So, well, if this is a good example of how to use it. So, if the mid price is equal to the reference price, we are the orders are going to be like in the same position probably of the order book. If we shift the price to the left, the probability of execution of the sell order will be much more higher than the buy order. And if we shift to the other side, will be like the opposite case, right? This is like I made this explanation like very detailed, or I did a lot of details, so you can understand why I'm doing this, to shift in the mean. I want to increase the probability of execution of one of the orders based on this indicator. Then you have to find your indicator, or you can construct a new indicator based on the trades or based on the size of the order book. But this is why it's important to apply a shift to the mean, right? Well, this is the part that will be like how we can shift the mean. In this case, we are going to use the RSI, and we are going to create a price multiplier. The price multiplier will be multiplying the mid price to get the new reference price where we are going to place the orders around it, right? Then we are going to use an indicator that is a normalized average true range. I found this very interesting to do market making since, let me show you how the indicator works. But this is the bad thing is that I don't have the normalized average true range in TradingView or in Binance here, but we have the average true range. The difference between the average true range and the normalized average true range is that the last one is normalized. It's divided by the close price. That means that it's a percentage, and we can apply that percentage. It's very good for us to use the normalized, because if the price moves a lot, we don't care. We just care that it's a percentage from the close price. So what this means, the average true range is calculated by doing, if you want, you can check the formula in Investopedia, for example, ATR in Investopedia. But essentially it's getting the maximum value of the difference between the high and the low, the high and the previous close, and the low and the previous close, right? If you want, here you have the formula. But essentially it's this one, the high minus the close. So in this example, suppose that we are getting this candle. The high is this one, the low is this one. So this is one of the values, is 0.009, right? As you can see here, that is the value of difference of price. The ATR is in price, so 0.09. The second will be the close, the high minus the previous close, that is this one. Well, I don't know why it's not I'm pressing the wrong thing. So it is 0.0092. Like this close is very close to this one. And the other one is the other difference is the open versus the close. So well, this one will be 0.11 because it's the maximum. As you can see here, is the maximum of the was the low minus the CP. So will be the low, that is this value. So it's 0. So the value that will be the most bigger one is this one, that is 0.009 for the ATR. So also this is like a value for this observation, but the ATR is like an average of that value. What is going to tell us this indicator is the size, the average size of the candles. So it's getting like the highest movement of the candle based on the low and high or the low and the previous close, or the high and the previous close, and it's saying, okay, the size of the candle is 0.09 USD, the price variation, because it's in this unit, is in price unit. What we are doing by normalizing the average is saying the price movement, the average price movement is 0.002%. So basically, it's saying the variation that you can expect in the candles is 0.x% with the average true range. That is important for us because we can define the spreads using that. So you can tweak the length of the ATR. For example, here we are using 14 for ATR, but you can select, I don't know, the median of the last, or the mean of the last 20 periods, for example. The next thing that you will need to do is to see how you're going to use that value to adjust your spreads. So now we are going to review the example and how you can customize that to be more aggressive or less aggressive. But what it means, if the ATR is high, that means that the last candles that you have recently have a lot of volatility, because if the candle is high, that means that the price is moving a lot. The spreads that you're going to use are going to be higher. And if the ATR is low, is that you don't have so much volatility, the spreads are going to be closer. Yeah, that's the intuition that we want to gain here. So just to summarize, we are going to have the RSI to shift the mean and the normalized average true range to increase or decrease the spreads, right? And we're going to have these new parameters that will be the shifted mean and the dynamic spread. For now, seems like it will be a very complicated strategy, but don't worry, because we are going to extend the pure market making. We are going to create 2 new parameters, and that's essentially all what we need to do. Then it's up to you. I'm going to show you where you can introduce changes to change the indicators that you want to use and to change how you are shifting the mean and how you are applying a multiplier to the spreads. But essentially, it's like a framework, this, and you can enter in some specific parts of the code to modify what you want, and that will be working for you. Also, you have here a Notion template that is this one. No, it's not this one. It's this one, where I explain like what the bot is going to do. So this is not cohort. This is because the bot camp, if you take bot camp, you will learn how to code strategies with Hummingbot. The bot camp is a 4-week course, and you have also 2 weeks more to work on your script. But essentially you learn in 4 weeks how you can code strategies. You will have one-on-one sessions with us to understand how to tweak your strategy. For the end of the course, you will need to also provide a strategy. So the first thing that you need to do before you code the strategy is to define what you want to do. So this is a template that will help you to define what you want to do, the goal of your strategy, the hypothesis, the description. Here I have the description of this example, which are the inputs that you need to do, and which is the flow chart of what the bot needs to do. So in this case, this bot, So in this case, we are going to check if it's time to refresh the orders. If so, we are going to cancel the existing orders of the market. We are going to calculate the indicators, in this case, RSI and normalized average true range. We are going to shift the mid price and modify the spreads by using the price multiplier and spreads multiplier. So what we are going to do, we are going to calculate indicators, and based on indicators, we are going to say, based on these indicators, the price multiplier is this value. And based on this indicator, the spreads multiplier is this value. And then we're going to multiply the spreads that we defined before. Lastly, we are going to create the proposal, adjust the proposal to the budget, place the orders, and update the timestamp. This is the same of the pure market making. The only difference is that we are introducing here the calculation of the indicators. Also, to demonstrate how you can use information from the bot, see what is happening, I include a formal status that is showing the active orders, the balances, the mid price, the shifted mid price, the spreads, and the spreads multiplier, the candles with the indicators, the current indicators, and I'm also going to show the total sales, the total buys, the volume sell, and the volume of buy orders. And for that, I'm going to use these events: the did complete buy order, did complete sell order, and the did fill order. That's essentially what I'm going to use in the whole code. So, well, that was, I think, a very good explanation of what we are going to do. Now it's time to code. Well, if you have any questions, I don't know if, are you talking in a channel? Because I don't have the, let me review if there is any question on the channel. Are we using community calls, or which is the channel that we have some questions? Can you point me? Okay, let me see if I can hear it. If here I can see. Okay, there is no questions yet, right? Okay. Well, Carlito, no questions yet. Perfect. Well, that was a introduction of what we are going to do. Now it's time to do it, right? So, well, for this I prepared a script already. So, first of all, we are going to review the simple pure market making, and then we are going to see changes with that, right? So, PyCharm. Now we can see. Can you see PyCharm now? I hope so. So, well, if you confirm that you're seeing PyCharm, then we can start. Perfect. Well, we have here the simple pure market making has some parameters like the bid spread, the ask spread. I will try to maximize a little bit so it will be better here. So, okay, now I think that you can see the code better. So you have the bid spread, the ask spread, the order refresh time, the order amount, the pair that we are going to use, buying as paper trade, all this stuff. The thing that is important for us is that we are canceling the orders, then creating the proposal, adjusting the proposal to the budget, placing the orders, and updating the creation timestamp. All this method, you will have a quick start guide that will be released next week with all the explanation of this, so you can code along a pure market making strategy with that. But for now, let's see where we should introduce our changes based on the design template that we created. After the cancel orders, we should compute technical indicators, shift compute the price multiplier, and based on RSI, and compute the frame multiplier based on normalized average true range. Here, this is what we should be doing. Also, we will need to here initialize the candles. That's another thing that we have to do. We will need to start and stop the candles when the bot starts and when we run the stop command. This is another thing that we should be doing. And we should define the parameters that will be the price multiplier. Also define price multiplier, spread multiplier, and the base, like the price base, which is the type of the price that we are going to use, and which is a spread base that we are going to use. And I found that if we use a spread base, that then will be overridden by the normalized average true range. But if we use a base, then you can see which is the multiplier and see how to adjust the normalized average true range to find the spread that you would like to have in a normal use case. So now let's review the strategy that I created for you to see the implementations that I added, that are the ones that I mentioned just right now. So the first thing that we are going to use for the spreads is the spread base. At first, I would like to have 0.8%. The spread multiplier by default will be 1. Then we are going to adjust that spread multiplier based on the NATR. And here you have an explanation. This script will be submitted to the code base later on, so don't worry for that. But let's study this one now. So if the normalized average true range is 0.2%, the spread factor will be 0.02, that is the normalized average true range, divided by the current spread base, so it will be 0.25. That means that if you want this value won't be used, we are going to override the spread base all the time when submitting the orders, but you will see which is the multiplier that you are using. So if you want to the normalized average true range, when you compute the indicator, has a value that is called scalar. The scalar lets you scale the normalized average true range and multiply it by the value that you want from the design. So if you find that every time that you place the orders, the scalar the multiplier that you have for the spread factors is, I don't know, 25, that means that the spread that you set as a base is very low. So or the scalar that you are using for the NATR is very high. So probably you would like to modify that scalar from the NTR and see and find a way that the multiplier is not so high. Or also you can customize and put a top for the multiplier and say, okay, the multiplier cannot be higher than 2 and cannot be lower than 0.5. But well, that's up to you and how you want to modify the strategy later on. The second thing that we are going to define is the price source, that this will be, which is the price that we are going to use to calculate the new shifted price. I found this very, very interesting in markets like RLC that I was trading yesterday, since the last traded price can differ a lot from the new mid price, since you can have a trade here and then the bid and ask is moves up. So well, it's interesting to check which is the better source to use to calculate this. But well, that is another study also. So another assumption that I did that I didn't mention before is that which is the maximum range that I can move the RSI, the mean, that I can shift the price. Because if the RSI is 100, which is the maximum value that I will be shifting the price? The first assumption that I did was, okay, let's set up a fixed percentage and said this is the maximum percentage that you can move. But that wasn't so smart, because how I can define that percentage is based on the volatility of that market or in the normalized average true range, because it's the shift that I'm going to expect. So this is a little bit more technical, if you want to call it like that. But what I'm doing essentially is multiplying the value of the RSI by the normalized average true range. That means that if the normalized average true range is 0.2%, remember the definition of the indicator means that we are expecting a moving of 0.2% of the size of the candle, of the maximum size that the candle will have. That would be like 0.2%. So if the RSI is equal to 50, that is done to nothing, 50 will be 0. in this formula, we are not going to, the price multiplier will be, well, here the formula has an issue, I think. Let me see. 50 multiplied minus 50 will be 0. So the price multiplier will be 0. So yeah, because then we are doing 1 plus price multiplier. So it's working okay. So if the RSI is 0, this in a whole will be 0. So we are not going to affect the mid price. If the RSI is 100, that is sell, this will be minus 1. This whole will be minus 1, and multiplied by the ATR, that is 0.2, will be minus 0.2. That means that it will be shifting the price down this amount. Yeah. If the RSI is 0, will be shift the amount this value. So well, this is a little bit of maths. Don't worry if you don't understand it properly, then you can review this code and you will understand. But essentially, I'm setting like a top to move the price, to shift the price based on the size that I am expecting from the normalized average true range. I'm saying you cannot move more than the average true range, the mid price. You can also say the average true range divided by 2 or change the parameter as you want. It's just like a way to do it. Then we have the trading configuration. That this is the same that we had in pure market making. That was the one that we were using. Then here we are initializing, creating an instance of the candles. In this case, to create the instance of the candles, we are selecting the exchange that will be Binance, and the trading pair that is RLC USDT, and the interval of 3 minutes. Then here I am initializing these variables that will be the ones that we're going to use in the events, and then to show the reporting of how many trades, how many volume we are getting. And that's all from the configuration of the script. Then, as I mentioned, we need to start the candles and stop the candles. Yeah. So, well, this is not. So in the init, we are going to do the init of the script storage base, and then we are going to run the method start of the candles that will start receiving the information via WebSocket of the new candles and collecting via REST the information that is missing. And if we run the stop command, every time that you run the stop command, then you have the ability to do some custom stuff below this onStop method. So we are going to stop the candles here too. As you can see, the onTick method is exactly the same. The only difference is this one, that is update multipliers. The rest is just the same of pure market making. Let's review this is the comment that we did as right now. But as you can see, this is the same. The only difference is these update multipliers. And also here we are adding this feature that is and self candles is ready. Because the candles object has a property that is ready. And if you don't have the whole information collected, you cannot compute the technical indicators. So before starting the bot, we would like to see if we have all the information necessary to start. Then let's review the method update multipliers. That is the only difference that we have here. And what it's doing essentially is get candles with features. This get candles with features is getting the data frame of the candles, appending the RSI of 13 periods, appending the normalized average true range of 15 periods, check that the scalar here is 0.5. Yeah, then we're going to review why I selected this value, and we are going to tweak it to see the impact on the orders. And once I have the candles here with the indicators that I want, I'm doing the normalization that we reviewed beforehand in the description of the scripts. As you can see, I'm using the normalized average true range and the RSI, 50 minus the RSI divided by 50, and then multiply by this value. This will be the shift, the multiplier for the price. and this will be the multiplier for the spreads, right? Well, that's like the main change that we did to the on-tick method, and we also add a change to the create proposal, since instead of doing instead of creating the proposal and applying the ask spread and the bid spread, we are going to first of all get the mid price. That is the first thing that we are doing here. We are getting the mid price. Then we are computing the reference price. The reference price will be the mid price that we get affected by the price multiplier that we computed before. And the spread adjusted will be the spread multiplier multiplied by the spread base. So this is what we define on the logic that we defined before. And as you can see, then the code is the same that we had before. So to summarize the changes that we made to the simple pure market making, we changed the price and the spreads that we are using. We are computing those multipliers by using the RSI and the normalized average true range. So we are just adding this method, changing the reference price, and based on that, the buy price and the sell price with the spread adjusted. Initializing the candles. That's essentially all. And the last thing that we are doing is also using the event of did complete buy order and did complete sell order to increase the quantity of orders that are sold or bought. This is just an example to see, to show you that you can collect information while the bot is running to do something custom, or shows a metric, a custom metric on the formal status that we are going to review later on. And also in the did field order, we are summing the volume, the amount that we are collecting for each field that we have. Now let's review the formal status. It's similar to the one from the script strategy base. The only difference is that we are not logging the warnings, we are just logging the information. So we are logging the balances, we are logging the active orders DF, and here, this is the last part, we are getting the mid price, calculating the reference price, and then showing the total buy orders, the total buy volume, the total sell orders, and total sell volume. These are the things that we are computing with the events. So here is an example of what you can how you can show information computed by the events. Then we are showing the spread base and the spread adjusted based on the spread multiplier that is computed every tick when it's time to refresh the orders. And then we are showing the mid price, the price shifted by applying the multiplier, and the price multiplier that we are using. Lastly, we are getting the candles with the features, and we are showing the candles in the terminal, so you can see the candles. We are showing the last 5 records, but you can see the values of the prices and the values of the indicators that we have at that moment. That's essentially the whole script. So now let's run it. I don't know if there is any question you can ask in the chat, but we are going to run now the scripts. So let me change the source here. Now I think that you should be seeing the confirm if you can if you can see my terminal now. Okay, so for this I also connected my Binance account. So yeah, it's a small text. Okay, I'm going to increase it. So well, if I run balance here, let me see what I have. I have here 22 RLC and 58 USDT. So the order amount is 7, so I can place 2 orders. We don't have to worry about that. I'm going to run the script now. So start script, and this will be PMM with shifted mid price and dynamic spreads. Status live. live. So, well, as you can see here, I'm placing the two orders, 1.516, 1.526. The counters are in 0, so I didn't execute any order yet. Well, here the bot refreshed the orders. Then I have here the spread base. Well, I have an extra space there that I don't need, but well. The spread base, as I mentioned in the before, is 0.008, and the spread adjusted is 0.032. So as you can see, the multiplier is 0.4. Does that make sense? Well, as you can see, we're using the normalized average true range, that is 0.0032. So it's using this value as spread. So it's working as we expect. Remember that we are scaling the normalized average true range to 0.5 when we are computing the indicator. And now let's check where it's placing the orders in the UI. That is much more friendly than just seeing the numbers. We are going to see now the Hummingbot terminal and see how it works. So let me shift this to, you should be seeing now Safari, Binance. Can you see that? Okay, you should be seeing now the... Okay, well, now we have here the two orders. Let me increase this a little bit. So, well, as you can see, based on the assumption that we did of using the ATR, that's why I selected those indicators. The bot is placing the two orders around the mid price, and the spread that we have is like an expected spread based on the size of the candles that we had before, right? It's like doing what we expect. Also, check that it's shifting. Well, here is in, well, we have to use the same values to check this. So this is 14. So this, that is 0.24, the RSI is this value. Let's check this is the same value. Yeah. Okay. So based on this, we can make sure that the bot should be shifting a little bit the orders to the right, to the mid price, since the RSI is saying like is like oversold. So he's expecting that the price is going up. So the probability of execution of the buy orders should be higher in this case than the sell orders, right? Also, here we are using the scalar like that is 0.5, so will be like the mid. Yeah, it will be like a half of the real average true range, the value that we are selecting here, right? So if we want to be more safe, we can just select as an scalar 1 for the ATR. So now let's test that solution. So here we should go to PyCharm. Let me see. I will show you how to customize that. Instead of using a scalar of 0.5, I can use a scalar of 1, right? So now we have to go to the terminal. We should stop the bot. That will cancel the orders that we have here. Let's check the balance. If we have the enough balance to place the two orders. Yeah, we are balanced. So if we run start again, status live, remember that the order of the last normalized average true range was 0.032. If the scalar now is 1, is the real normalized average true range. The one that we used before was the middle, the half of the average true range that we were using before. So in this case, the spread adjusted will be 0.0062. So we are going to use a spread multiplier of 0.8 almost. And as you can see here, now the spreads of the bot are higher and the mean is shifted. Here we can appreciate that the shift of the mean is higher than before because the value of the normalized average true range is also higher. So this strategy always also, as I mentioned, is a dummy strategy because the parameters that I selected are not like optimized for the market. I did the solution yesterday, but essentially what it's doing is placing two orders around the mid price, but shifting the mid price based on what the RSI is saying. The RSI is saying that the price is going up, so well, I will shift to try to execute more buys than sells because then the price is going up. And the other thing that it's doing is checking, okay, which is the size of my candle? The average size of the candles in percentage. Oh, is this value? Okay, I would like to use this value to set up the spreads. So as you can see here, if the average true range is, let's see which is this distance. This distance is 0.73, and here we have 0.5%. That is expected. Sorry, I'm just I wasn't showing Binance. Sorry, I was showing the terminal. Sorry, I was talking with Binance, but I just realized that. So that is expected because here we have the I cannot. Here we have 0.7% up to this value and 0.5, 0.6 up to the value of the bottom. That means like it's almost 0.6% to the two sides, but we have the shift of the mean. Remember that we have that shift of the mean. So 0.6% is the value of the average true range that we were seeing here in the terminal that we were using of Hummingbot. 0.006, 0.0061 is like 0.6%. The normalized average true range. That is the average of the percentage of distance between the maximum value of the low and high. So I think that this is a very good approach or very good indicator to use to select the spreads that you want to use. And what you should be doing is to tweak those values to adjust it to the values that you want based on the risk that you want to carry. Well, that's all about this example. This was called the monthly developer call. It's more focused on developers, on people that can improve the code and code your strategies. Now we change the name to how to do things with Hummingbot. Well, I think that is an example that's why I spend a lot of time at the beginning trying to explain what I want to do and which are the places of the code that you should introduce your changes, because I think that this task can be performed by a person that is not a developer, because you just need to know which are the parameters that you need to tweak in order to create your custom strategy. Further improvements to this are using hanging orders, because every time that you execute an order, then the order that is paired to that will disappear if you don't have an execution of it. So I recommend you to use hanging orders to complete the cycle of that order. That is one of the improvements that you can do. The second improvement will be find indicators to predict better the trend and to predict the spreads that you want to use better to capture as much volatility as possible. Well, then it's up to you to customize the strategy and say, okay, if the indicators change, also cancel the orders or do some extra logic in order to improve it. But essentially, this is like the core that I would like to show you. Well, now it's time to ask some questions. Well, we review the implementation. So, well, the first question is if you like the design of the strategy, what you would like to improve of it. If there is anything that you would like to improve, I will put here. Okay, I will put Discord here. Sorry, I'm showing the terminal again. So this is like the last slide. That is, if you like the design of the strategy, what you would like to do. Yeah, the editor is PyCharm, but I'm using the new theme. They release a new theme, and I like it a lot. It seems like very clean. So, well, that is all. I would like to see if you have any opinions about the strategy, and as this will be like on how to do things with Hummingbot, and probably we can start building like more crazy strategies or kind of things that you would like to learn. Which is the next challenge that you would like to see? Which is the next strategy that you would like to see? And well, if you have any proposal for that, I don't know. We have 8 minutes left because this meeting was like for this demonstration is like 1 hour, but if you have any questions, we can review it now. I don't know if there is any question on the chat. Okay. Well, I think that we don't have any questions, but well, the live will be is recorded, so then you can watch it again on YouTube. Also, you will have the script available in the code base. And the last thing is that if you have any improvements or anything that you would like to see, add that in the comments of YouTube when the video is like released. Uh, in the future, it would be great to go through maintaining state after stop and start. What do you mean, Kalum, by maintaining the state? Restoring the orders? Or what? Keeping track of the positions. Okay. You mean for the directional framework? Uh, yeah. But the bot is going to do that automatically. Usually, when you have a bot trading on spot, it's going to is going to is going to restore the orders to cancel the orders that it has before if it didn't cancel it and start over again. But if you want to do it for the directional strategy, that is different. You should be checking that is a different thing. Well, Trevor says, what range about ATR 0 to 1? Yeah, the problem of ATR is that the ATR is measured in price. It's the difference, the absolute difference between, as I mentioned before, here we have the maximum of the difference between the high and the low, the high and the previous close, and the low and the previous close. So, here, as you can see, the ATR is measured in price. This is not percentage. As you can see here, for example, this is 0.08. This value, 0.08, is a difference in price. And as you can see, the values are in that order because it's the average of the last X periods. So instead of using this value that is subjected to the price, I am using the normalized average true range that is doing 0.002 divided by the close price, that in this case is 1.5. So as it's a percentage, then I can place the orders as a percentage around the mid price. That's why I am using the normalized average true range instead of using the average true range. Okay. Any other question? Okay. I'm watching the chats. Is there any other chat or any other that we are missing? Any other comment? If not, we can. If there is no other questions, we can finalize this meeting. I hope that you like it. Well, then you can review it from from the, from the YouTube channel and add comments to the videos. And well, then the community managers will be checking if there is anything that we can review. Okay, well, thank you very much and see you in the next How to Do Things with Hummingbot.